Well, welcome everyone. This is David Morgan, the Morgan Report, as you know, and today I have Stefan Gleason with me. We have a long history. Stefan's been instrumental in helping me with the Morgan Report over the years, and I've also reciprocated getting more people involved with the Sound Money Defense League. And Stefan is chairman, and I'll just read the opening and I'll turn it over to you, Stefan. But about us, Sound Money Defense League is focusing like a laser beam on restoring gold and silver to its historic role as America's constitutional money. It is working at the state and federal level to rally hundreds of thousands of concerned Americans to oppose the plans of the federal government and central banks to debase the currency, work with allies in elective office to introduce legislation to support sound money policies, and through aggressive legal and grassroots citizen action, expose and punish the global monetary managers running the Federal Reserve and the tax and spend politicians who undermine the U.S. dollar by supporting crushing debt, crony bailouts, and reckless money printing. I couldn't have said it better myself. It aligns pretty much with my main mission, which if I had to choose a word, it would be freedom. But coming back to you, the number one question I want to start with, it's not really off the wall, at least I don't think it is. And that is, I stood shoulder to shoulder with you in Utah, one of the first states to reenact that we and citizens of Utah could spend gold and silver in any transaction statewide as long as both parties agreed. And I loved it. I was, champagne toast and all that goes with it.
Yeah.
But the question is, why do we even have to do that? I mean, doesn't the U.S. Constitution guarantee already that the states can only coin money, or am I off base?
Yeah. Well, it's not really necessary for two private parties to have legislation to reinforce the idea that they can make a transaction in gold and silver as the currency of a contract. That's absolutely true. We've gotten away from sound money at the state level. Of course, that the big problem is federal and the Federal Reserve System, the U.S. Treasury, the delinking of gold with the Federal Reserve note, and the pure fiat standard that we're now on. And so, yeah, it is an admonition to the states in the Constitution that they shall only make gold and silver coin a tender in payment of their debts. And the whole concept behind that was the experience during the Articles of Confederation, where states were coining or creating their own currency, and they were paying with something besides gold and silver, and they didn't want states to do that, so they actually required states to use it as a payment mechanism. And I guess up until 1971, when we were on a gold standard, using the U.S. dollar was in fact a payment indirectly, I guess, in gold and silver. And now we're completely separated from that, and this idea of states using gold and silver is really just not happening. And so some states have come in, like Utah, and said, let's pass a law that encourages this again and encourages this, not just the state, but the people to use gold and silver. The problem, I think, David, is Gresham's law. I think that's the initial problem with respect to the lack of gold and silver being used as actually money in commerce. And that's because Gresham's law, which says the bad money pushes good money out of circulation. And ultimately, the bad money is the Federal Reserve note. The good money is gold and silver. It's still money, but now it's going into private hoards as savings. And so people don't really want to spend their gold and silver right now. For one, it's not as convenient, perhaps. That's one reason. Another is, why would you give somebody gold and silver when you can give them a Federal Reserve note if they're willing to accept it? Sure. So until such time as maybe people are not willing to accept a Federal Reserve note, or there's some other incentive for somebody to pay in gold and silver, they're going to hold it as a savings and not use it as money. Of course, some of the other problems that have impaired gold and silver's use as money is simply the taxes. And that's one thing that we're focusing on with the Sound Money Defense League. In fact, it's probably our number one area. It certainly is our number one area, really. And that is removing taxes, particularly those at the state level, where we've had the most success. And starting with the sales tax and getting rid of the sales tax for acquiring gold and silver, which many states had. There's only 5 that remain that have full sales tax on purchases of gold and silver. And then beyond that, going and removing the income tax at the state level for when you sell your gold and silver and you're having to pay a capital gains tax. Of course, the big problem is at the federal level, where they tax at a very high 28% rate on capital gains. They consider gold and silver a collectible. This is purely an IRS construct. It's not even in the statute. And so that's a more difficult challenge to address. But at the state level, we've been seeing many states do things like what Utah did, to remove taxes, to encourage gold and silver as savings, to encourage it as a payment medium. But I would say we're not at the point where that has taken off in terms of using it as a payment. And there may be a point where Gresham's law reverses and we end up with the opposite scenario, which they call Thier's law, which is kind of the ultimate end game for a fiat currency, where the bad money leaves, nobody will accept the bad money and the good money comes back in. But I don't think that we're anywhere near that. It could happen quickly, I suppose. But for now, gold and silver is just a very good form of savings. It's not so much a chosen form of money, at least by the public.
No, I agree with everything you've said. I mean, I've thought about it, for a long time, and unless you get an incentive, you buy your silver at $5 and now it's nearly 30, so you got a nice, purchasing power, really, or maybe a par purchasing power in real goods and services, but we don't need to make the inflation argument to this audience, right. I don't think. Point being is that now you spend it, now you got a tax liability, maybe not at the state level, but at the federal level. And as you said, I've always been upset that they use the 28% collectible, which it's money. So I think there's three areas to address here that I wanted to catch up with you on, and that is how many states have encouraged using it as money across the state, such as Utah? How many states have gotten rid of the sales tax aspect, which I think you said there's 5 remaining? And then there's a third one slipping my mind that's gotten rid of, we haven't gotten rid of the federal yet, but is there a third place in there where states are quasi-warm to, having gold and silver in there? So can you break that down for us?
There's states that are adopting or are now turning to gold and silver as a reserve asset, which is also promising. Removing income tax, removing sales tax, holding it in reserve, encouraging its use through, promoting gold clause contracts or just having a mechanism for acknowledging gold and silver as money, as a transactable currency. So just kind of taking a step back, the big and primary front that we attacked over the last 10 years with the Sound Money Defense League was sales tax. And when we started the efforts with, also the support and assistance of my company, Money Metals Exchange, we're one of the largest online bullion dealers in the country. We have a very large list of customers. Those customers have been involved in these efforts as activists, as essentially grassroots lobbyists for these policies. We've been encouraging them to engage with us, and they've been extremely helpful in these battles, I can tell you. When we started in 2014, there were, I believe, 32 states that exempted gold and silver, at least in part or in full, from the sales tax. Today, there are 45. There's been 13 more states in the last 10 years that have enacted this policy of removing sales tax. The most recent was Kentucky and Wisconsin this year. Last year, it was Tennessee and Mississippi. And we actually have a bill right now on the desk of the governor of New Jersey, which is a big Democrat state, but it went through both chambers, I believe unanimously, or there may have been one vote against. But anyway, it's now on the governor's desk, and sometime in the next, I believe, 3 weeks, the governor needs to act on that. We're hopeful that he'll sign it. And that would make it down to 4 states that fully tax gold and silver purchases. And then there's 6 of those other states that tax certain types of purchases, but not all. And so that's another frontier. The worst of that is California, where they basically tax every transaction under $2,000. But if you buy more than $2,000, you pay no tax. So really, it's a poor tax. This threshold they have in California and 5 other states, they have a poor tax, where basically if you're not wealthy and you make a smaller purchase, you get a sales tax. If you make a larger purchase, you don't. So we think that's stupid. We're going to be going after that as well. In fact, we ended that policy in Virginia last year, which was one of the states that had that. So sales tax has been the number one front and the number one success area for the Sound Money Defense League. Then we've moved now increasingly to the income tax. And so there's already 8 states that don't have an income tax at all. So that's fine. Or that's obviously every asset is exempt at the state level. And then there are now 5 states that exempt gold and silver from the income tax specifically. The most recent being Alabama and Arkansas to pass this. Arizona did it. Utah did it as way back when. And there's one other off the top of my head I'm not remembering. But we have several other bills on that front. And I think that's kind of where we're turning in terms of the policy. We've pretty much knocked out the sales tax. There's still a few more states, Vermont, New Mexico, Maine, and gosh, I'm blanking on the last one there. But anyway, we have 4 states after New Jersey. There's a little bit of a dispute going on in Kentucky right now. The governor tried to line item veto the bill. The legislature said it was an illegal veto. They didn't override it because they felt they didn't need to. And now the question is, will that law be going into effect next week? And we're going to see. It looks like the governor's sticking by his position that he vetoed it. And we'll see if there's litigation on that. Unfortunately, that's not a clean win. So now we're moving to the income tax. And then the other thing that's happening a lot lately is states now are looking at the fact they have all this exposure to the Federal Reserve note. They have all this exposure to debt paper in their reserves and in their pensions. And very few, if really just 1 or 2, actually have gold on the books of the state. And so some of that is a situation where a state literally doesn't have the power to do it. And so it requires legislation to enable them to do it. One, again, back to Utah, they just passed a bill this year that we assisted with that says that the state treasurer can and should hold gold and silver as a reserve asset for the state of Utah. And they are presently, as we speak, considering, the whole question of what to buy exactly, where to store it, and so forth. They're looking at an initial investment of $150 million for the taxpayers of Utah. Tennessee did that last year, and they're also in the process of looking at acquiring gold. They haven't done it quite yet that we're aware of. Ohio owns physical gold in their pension fund. Texas used to own physical gold in the teacher pension fund. We understand they actually sold it 2 or 3 years ago, and we don't have any indication they've reacquired it. So that said, you have a situation where around the globe, you have central banks picking up gold and silver in major ways. They're stockpiling gold and silver for various reasons: inflation, concern about weaponization of the U.S. dollar, and so forth. And they're acquiring gold at record rates in the last 2 or 3 years. And states are starting to think, wait a minute, maybe we need to be doing this. And, while the problem, again, is federal here in the United States, for the most part, when it comes to sound money and financial, recklessness, really, monetary malfeasance and so forth, states don't have to be sitting ducks. They can take some actions. And one of those actions is to hedge their debt paper holdings, which so many of them have, billions of dollars of low interest, negative real yielding debt paper, and they ought to have gold in that mix to hedge against that. And so we are starting to see more states look at doing that and actually doing that. So that's kind of the new frontier for the Sound Money Defense League. There's many other policies that we're promoting beyond that, but those are kind of the core 3: the taxes on the purchase, the taxes on the sale, and then encouraging states to hold gold in reserve.
Let's go back to Utah as an example. So we know you can use gold and silver in any transaction. And, when that took place, then, we had some meetings before and after the, ceremonial signing. And one of the points I brought up to Larry, who really ramrodded the legislation. Of course, I admire him to this day and always will. But, there's that practicality problem. You go into Walmart. Well, is Walmart going to take, a silver coin? And probably not. Their clerks don't know, and then it's, well, what is it worth? Do I get the spot price off my phone? Do I use the London close of last night? All these things. And of course, the idea being that you use a state depository, which goes along with what you just said about using a reserve of gold and silver at the state level. But beyond that, just a depository for transaction purposes, where with the world of the blockchain and the banks issuing debit cards, it's a clean process. You can issue a debit card that's backed by gold and silver only. Agree on the terms and conditions that you're going to use the London fix from the previous night as a transaction as far as the exact amount. And, over the long run, that's really the way to do it. It doesn't have to be the London fix, but it's going to be an agreed upon closing price somewhere.
Right.
And well, yeah, it changes. Yeah, it changes, but usually within, small percentage. I mean,
You could even use a live price. It would be technologically possible.
yeah, exactly. So
Yeah.
that's not an issue. It's just, and so that's been done here basically in Spokane, as you know, with my friend Dale. And of course, unfortunately, they're not taking new clients. And the reason being, as you started with, which is true, it's Gresham's law that, well, I've got my gold and silver and I got my debit card, but I don't want to debit out gold. I don't want to debit out silver. It's appreciating and I don't really want to pay the tax right now. So in my case, in all cases, all those debit cards have two sides. They have your precious metals side and they have your fiat side. So when I use my card, I debit out the fiat side. Why do I really want to spend, even though some of it's at a gain and they do all the paperwork for me? So at the end of the year, they'll say, well, you debit it out, make up a number, I don't know, 127 ounces of silver during the year, at all these different prices on all these different dates. But it's already given me what the gain was. So I could add up all those numbers. There it is. So that's convenient, but it's also a bit cumbersome, but with, computers, it's not a big deal. The point I'm making is that there's got to be practicality to how to use it, because in a coin transaction, as piratey as that sounds and as kind of cool as it might be, it's impractical. I mean, the Starbucks barista, the grocery store, the gasoline attendant, they're not going to know what to do with it. So if you put it behind a blockchain, now it's usable. They're used to doing it. It's transparent to the merchant. They get a plastic card and it goes through the banking system, and the back end takes care of what was the price of silver on any given day. You have any comments on that?
Yeah, I mean, I think it really, again, the Gresham law problem is what causes these ideas to not take fire in the current environment. Even though the technology is there, I don't believe currently the demand is there, and that's been proven, in the sense that none of these platforms have really taken off. They've become sort of glorified app-enabled storage programs. And if they're built around the concept that the transaction fees are how the platform is funded, then they're going to have a funding problem. They're going to have difficulty as a business because there isn't enough turnover of people that want to sell their gold. I mean, you and I want to do it, when you spend your gold, you're essentially selling it, first of all. So you and I not necessarily not wanting to sell our gold. We might do it just because it's cool and we can do it. Hey, I just spent my gold, but we're kind of wingnuts. We're fanatics. The business case is not really there for the average person, even the average gold investor, to spend their gold, because that's selling their gold. And people are selling gold, obviously, to pay expenses and so forth. But you don't have to do it through one of these platforms. It's just as easy to do through a depository or a dealer, or at least close to as easy. So I think in order for that to take off, somebody has to be willing to make a very long-term investment. Maybe it's a state government like Utah. And I know they're talking about this, or talking about having a platform that allows for gold and silver payments that's overseen by the state. And we've talked to them and given our input. And my thought on that is, look, if you're willing to take the political heat for setting something up that nobody uses for a long time, and you're able to explain that this is an insurance policy that we're creating for people in our state that we want to do, if they're fine with that, because 4 or 5 years from now, they could spend $15-20 million on this thing. It could be this beautiful mousetrap they built, and nobody uses it, and the press are going to go, hey, this was a boondoggle. Mm-hmm. And if they're willing to accept the heat for that, because they're long-term thinkers and they realize at some point this could be absolutely critical to have a credible payment system for gold and silver that maybe is managed by a state, or a state's involved in, or even a private platform. The problem with the private platforms is, again, they have to fund themselves. they're not able to go to the taxpayers to fund some long range project. They have to go raise capital. They have to do stuff. And so I worry about the fact that the business case isn't there. And thus the private platforms are not, in my view, that safe in the sense that they're not necessarily going to be able to finance themselves until such time as this does have a business case. Now, I could be proven wrong on that, but I think right now gold and silver is savings. It's not money that people want to transact with, but that could change quickly. And so again, it's a great idea, and it's absolutely achievable. And when it's needed, it will be really needed. But before that time, it may not succeed. And so that's kind of a conundrum. But one of the things that's worth mentioning is that you can borrow against your gold. So this is a scenario. Money Metals provides the ability for somebody to pledge their gold and silver into their storage account for a loan, for a line of credit, sort of like a home equity line, except it's a line of credit against your gold. So that scenario, we have actually a fair amount of demand for that kind of service because people are, number one, not having to sell their gold, but yet able to get liquidity from their gold and silver without selling it and without incurring a capital gain because they sold it. And so borrowing against your gold is something that actually is currently there is a use case. People are doing it. And it gives you, the liquidity from your gold and silver without selling it. And so that's probably more viable, honestly, in the short to medium term, something like that.
I agree. I just want to interject the problem you just discussed. And, I've thought about it as well. And I'm involved with a blockchain-based gold and silver coin. And what we've done, although it hasn't really got a lot of traction, is any merchant that wants to be involved with it can set their own rate. So in other words, if you're going to pay me in fiat for the Morgan report, it's X. But if you pay me in gold and silver that's from the system, I'll take a 10% discount. So there's an incentive to get that transaction because, well, it's only 400 this way and it's 500 the other way. Hey, here's because you're getting that spiff and probably take care of the tax situation. Well, 20% may not, but the point being is you're incentivized because, as you say, these businesses are dependent on it being used as money. And if everybody's going to sit on it, then, as you said, repeating your words, I don't know if they're exact, but you've got a glorified app-driven blockchain-based storage program. And that's not what they're designed to be. They're designed to be an interactive daily commerce, movement of funds back and forth for goods and services across the world, which has the capability to do. But again, it's like, well, why would I spend this good money that's appreciating when I've got this phony fiat funny money that I can throw and, get it. So that's one, I don't know if it's a great solution, but at least it's an idea that, wait a minute, if I'm taking this vacation to Hawaii and the whole package is, $4,500 and I can get it for 4,000 if I spend my, my AGX, that's a pretty good savings. Yeah, here it is. I've got a gain on my gold anyway. I'm getting another gain here. I'm getting a 20% discount, but even there, how much, will that incentivize people or not? The market knows that answer, not me.
Right. Yeah. And so, I'm very hopeful for these ideas, but I'm at the same time a little skeptical. So I really want them to work. Believe me. We want to remonetize gold and silver, but that's why I sort of take a step back and say, okay, what is the impact that I can make and that Money Metals and Sound Money Defense League can make? And we know how to remove taxes. We know how to get these things done at the state level. And frankly, these things are all going to do better when the taxes are gone. That's one of the big frictions around the use of money. So the use of gold as money. So, we're doing our part to try to remove that friction by removing the taxes. The idea of these platforms, I haven't decided to take my company in that direction. We're a huge storage company, Money Metals Depository. We're a huge dealer in the U.S., but we buy and we sell. We lend against gold, but we haven't gone down that path, and it's mainly because I don't see the business case. But more power to those that do and are willing to do it. I support the idea. And, in the meantime, if we can remove the taxes so there's not as much friction around gold and silver ownership, spending, exchanging, that's great. And so that's where we're focusing.
Well, let's go to the federal level. I mean, if we go there and we can solve the problem at that level, well, that's going to be huge. So was it Senator or Congressman?
Congressman Mooney, yeah. Yeah.
Can you go through that with this? First of all,
Yeah.
give background for people that never heard of him. And once you've accomplished that, just proceed with where we are today.
Yeah, well, Congressman Alex Mooney, who I personally known since I was first in public policy in the 90s, which was where I started my career in Washington, D.C., working for a free market organization for 15 years. But Alex Mooney has been in Congress for about 10 years now. Unfortunately, he just lost the primary with Jim Justice for the U.S. Senate race in West Virginia. So he is out. He is no longer going to be in the Congress after the end of this year. We have other allies that hopefully will pick up the mantle on these bills. But Congressman Mooney has been really a leader since Ron Paul left Congress as promoting these sound money type bills. Specifically, he has the Monetary Metals Tax Neutrality Act, which is the bill that would remove the federal income tax from gold and silver, not just the factors of capital gains tax, but that higher rate, which is totally ridiculous. So that bill addresses that. There's several co-sponsors of it, has not received a hearing or a vote. He also has the Gold Reserves Transparency Act, and that is a bill that would audit the gold. It's basically the audit the gold bill. And, people in the community know that there has not been credible audits of the U.S. gold reserves for many decades. And, there have been audits of the audits and audits of the seals and stuff, but actually an assay and inventory and so forth, that hasn't been done for a very long time. And just as fundamentally, this bill not just requires that process every 5 years, but it also takes a look at and requires an audit of financial transactions that have occurred involving America's gold. And that, in my opinion, it was one of the biggest problems with Ron Paul's bill 10 or 15 years ago. He said he wanted to audit the gold, but it didn't deal with whether the U.S. Treasury has pledged the gold, used it in swaps, done transactions with the International Monetary Fund, leased the gold. And frankly, even if all the gold is in Fort Knox and West Point and Federal Reserve of New York and wherever else it's stored, even if it's all there, the big second question is, who owns it?
That's right. Sorry, I have to jump in and interrupt, but 100 times the location doesn't prove ownership.
Right. And now I guess it does. Maybe when you're the U.S. government, you can say, well, maybe you thought you owned it, but we own it now. So, maybe that's the fallback is like, oh, yeah, this has been pledged, but OK, sorry, we're breaking that promise. We broke the Bretton Woods Treaty. So why wouldn't we, so that's been interesting. And this bill would require a full accounting of any encumbrances placed against America's gold. Very recently, he's leveraged his office to reach out to the U.S. Treasury and the Fed about some other interesting questions. And frankly, that's one of the things congressmen and women can do without legislation, without hearings, without votes. They can ask questions, and they often get very interesting answers or non-answers, as the case may be. One of the things most recently that he did was he reached out to the Federal Reserve and said, we understand that there are countries that have been repatriating. We've heard through Europe and elsewhere that there's evidence that more countries are concerned about having their gold in the Federal Reserve of New York, particularly since we did the action against Russia after they went into Ukraine. We made their bars illegal. We weaponized the SWIFT system, and that has created naturally, and there's been plenty of reporting about this, a concern among central bankers around the world that the United States could be a potential adversary financially if they get crossways with the United States. And so they're rethinking, do we want all of our gold or much of our gold to be in the clutches of the New York Fed? Do we want to have all of our money in U.S. Treasuries? So we're sort of shooting ourselves in the foot. And there's clearly been major increase in central bank gold buying over the last 2 or 3 years in reaction to recent actions. And in addition to that, there's been evidence that some countries are seeking their gold to be repatriated from New York back to their countries. You may recall 10 years ago, the Bundesbank requested some of their gold back, and they were told, okay, sure, you'll get it over the next 7 years. And everybody was, and they ultimately got it in 3. But the question is, if this is gold that's sitting there at the New York Fed in a segregated container, that is their gold, that has not been pledged or leased, why isn't that being returned immediately if somebody wants it? I know that when somebody has gold in my depository, it's sitting on a shelf, it's in a container, it's theirs, they can have it immediately, they can pick it up, we'll ship it out to them. Why would it take 3 to 7 years for the Federal Reserve to return Germany's gold to Germany? And so, so we've been asking, and Congressman Mooney has been asking, how many people are doing this right? How many countries are doing this? And of course, the answer is, you need to talk to the New York Fed. The New York Fed says you need to talk to the Federal Reserve, Open Market Committee, and they're all pointing fingers at each other. Nobody wants to give the answer, and so that's ongoing. There's FOIA requests. There might even be a lawsuit now, but these are the kinds of things that Congressman Mooney has been interested in. He also has a gold reserves bill, and he also has a bill that has some other support that was to prevent the Federal Reserve from being involved in a pilot program for a central bank digital currency. And so that's another thing that he's been interested in, among others. So he's been a real champion for us on the sound money front. And I know there's others that are out there, and hopefully others that will pick up where he left off when he leaves Congress. But again, the thing about these bills, they're sitting there, they're well written in a crisis or a dynamic changes. They're there. Hopefully, they move forward in a scenario. But states, on the other hand, don't have to sit idly by waiting for Congress to address some of these issues. They don't have to be purely a victim of federal policy. And so that's really been the focus for us is the state level, because that's where we've had so much more ability to succeed and actual success.
Well, that leads me to the next question, and it's about bail-ins. I mean, there's an adage that I learned from the late, great Jim Dines. Once the ship has sunk, everyone knows how it might have been saved. I use that analogy or metaphor for a bail-in. You've been warned that the deposit that you have in your bank and you think is your money is actually legally, you're an unsecured creditor and it's the bank's money. Right. And then there's a question of, well, does the FDIC insure you to $250,000, so you only have to worry an amount above that level? But when you get to the nitty gritty, there's so little money in the FDIC that maybe even that $250,000 is at risk. So my point is, how do we implement the idea that you need to hedge? I've never told anyone to put all their money in gold and silver. I think that diversification is key in investing, but I also think the reverse is true. If you have all of your assets in the fiat system, be it a bond, be it a stock, be it private equity, be it real estate, everything is based on the printing press, and you have no sound money, you're also making a grave error. How do we get that idea to the masses that this is no joke? They may wake up and be Cyprus someday, and then they're going to throw up their hands and say, well, nobody told us. Well, I told people, and that got 2.5 million views. So I don't know how many watched it twice, but cut it in half. At least 1 million people probably got the message, but do they look at it as infotainment? Oh, the David's ranting again? Or is it a real deal that I need to prepare for? What do you do with this, your organization, to try to wake people up to take action rather than just look at this stuff as an entertainment?
Yeah. Well, the first thing we do is we're introducing legislation, talking to politicians, talking to our members and our customers, and giving them things to do to help move those bills along. These things end up getting into the press. If the state of Utah, for example, acquires gold soon, I'm sure that's going to be news. It's going to make it a little less crazy for a person to acquire gold. I mean, of course, there's more people holding gold now than probably in decades at the retail public level, but it's still very underowned, as you and I know. It's still not mainstream. So I think as these policies move forward, they're realizing there's grassroots support. They're passing bills. It's getting more publicity. We're out there, talking about this. We have a very large email list. We publish articles. Your stuff is published on our site sometimes as well. We're out there talking about this. Admittedly, we're not talking to all the American people, but I think when incidents occur, like the banking crisis, for example, the most recent banking crisis last year, that was a massive event that caused people to re-examine what they're doing with their bank relationships, because you had basically the twin threat of inflation, which was already obvious, and people were like, I've got money in the bank, I'm getting zero interest, or effectively no interest, and really negative interest if you consider that it's in real terms. And now the bank might fail. Like, these are two very good reasons to pull your money out of the bank and put it in gold. And people did that. And really at Money Metals, we had our best 2 or 3 months in our company's history during that scenario. So these things happen that are little wake-up calls, and then a new wave of people, it hits the radar for them. It taps them on the shoulder, and hopefully they get information and they take action. So I do think that over the last few years, we've been seeing more interest. It's still very small by comparison to the overall public. We're not assisted by stockbrokers and financial analysts and central bankers. I mean, bankers themselves, they view gold as kryptonite, sort of inherently. And then stockbrokers haven't figured out how to make money selling gold and silver. And even Jeff Christian, who many, are critical of, even he pointed out the reason that stockbrokers don't recommend gold and silver is because they know that when somebody buys gold and silver, it's going to be bought and put away, and it's going to be held for decades. It's not going to be sold. It's not going to be churned. It's not going to generate more fees for the broker. And so the financial experts make their money on, we have this, they have these PowerPoints. They tell you where you are. Okay, we're going to readjust. We're going to churn. We're going to sell this, buy that, sell this, buy that. The average lifespan of an investment is in your portfolio managed by these professionals is 1.5 years. And every time they turn it over, they make another fee. So that's one of the sort of systemic reasons, one of the inherent reasons that they don't recommend gold and silver. So I think it's just going to be a matter of more incidents, more things happening. I think this inflation situation is getting a lot of people very sensitive to what's going on. And hopefully we'll see increasing demand over time. We saw that in the 70s. It became a widely held and owned asset. Unfortunately, Dave, the other thing that's annoying and upsetting that's happening kind of at the same time in our industry is that there is a part of our industry that is harming investors and harming the reputation of the entire industry. And that's these dealers that you see advertising on cable television. And what they're usually doing, and pretty much without exception, I'm sure there's some exceptions, but I don't see many. They have a celebrity spokesperson who people trust, usually conservative person, maybe a former Fox News host or a current Fox News host or a former actor or a current actor. And they have this high profile celebrity spokesman. They go on there, they talk all the good stuff about own gold to hedge, own gold to protect, all that's great. But then you get into their funnel and they sell you on some high marked up, supposedly rare or commemorative coin or something that's priced 100% over the spot price of gold. And then some of these companies have just flat out disappeared. There was one, Regal Assets, which was out there for a while. He's AWOL, 20, 30 million missing. There's another one that just happened, another one of these, so they're not doing a service to the investor by putting people into rip-off forms of gold and silver where they make a massive margin. And so one thing we try to do at Money Metals is say, look, understand what the melt value is. You want to buy gold and silver for its globally transparent value, not some story, not some subjective thing, not a supposed collectible. And I'm not saying that there aren't true collectibles out there. There's some rare coins. And if you're an expert and fine, you can probably do real well. But most of the stuff that's being sold is collectibles by these dealers, gold IRAs, so forth. They put you in proof gold coins, proof silver coins, 100% markup. They put the entire IRA in that, or they create some Royal Canadian Mint 1.5 ounce special issue polar bear coin which nobody's ever heard of, that they sell for 100% over spot. And then when you go back and try to sell it down the road, you find out it's worth spot or maybe even less. Like right now, we're seeing some of this stuff came out of IRAs sitting in depositories, people that were sold on this stuff, and nobody even wants to buy it under spot. No dealers are interested. They're lowering the price even lower and lower because it's not a common item. It's not a silver maple. It's not a silver round. It's a 1.25 ounce oddball thing. And so, I mean, unfortunately, these dealers have been pushing people into that. So, and I don't know what to tell you about that. I apologize on behalf of the industry. I don't consider us part of that industry, that part of the industry, but it's happening. And so the most important thing is getting people to understand, yeah, you need gold and silver as financial insurance. The next question is, how do you move forward? And as you say all the time is, you want to, own it directly. You want to hold it. You want to know what it's worth. You want to know that it's, worth basically the spot price of gold. Don't pay for premium. Don't get a raw deal from your dealer. The most important thing is, what is the melt value of what you're buying? And try to go with the lowest premium. And that's all I can say. And that's what we emphasize at Money Metals. We don't deal in any of that stuff. But unfortunately, it's self-perpetuating because there's so much margin for those dealers doing this that they can afford the Fox TV, Fox News ads and the celebrity spokespeople. And it just continues and continues. And so we got to let people know, look for what the melt value is, figure out what the resale value is. If you were to turn around and sell it right away, what would you get? And it should be very close to what you paid. And if it's not, then you're buying the wrong thing.
I wrote about a lot of that in the 10 Rules of Silver Investing, not the detail, but, just in succinct 10-point form. And one that I want to add on to that happens every year, and that is getting a Mint State 70 2024 Silver Eagle. And then the next year, get a Mint State 70 2025 Silver Eagle. And then in the next year, get a Mint State 70 2026 Silver Eagle. So what happens is these big dealers take these coins and they get them graded and slabbed, and then they usually double the price or triple the price. And the ad is, well, you're getting, the highest graded, available. I called up one of our wholesalers, I won't name on air, and asked him, he had, I know from time to time people sell those back, So, how many do you want? I said, well, how many have you got? So he gave me a number. I didn't buy them all, but I bought a few boxes full. And you know what I paid for them?
Spot?
Pretty close.
Pretty close.
And the slabbing's what, $15 a coin or something? I forget.
Yeah.
So here I was, and I gave them out as a premium at the time for new subscribers. But, and the perceived value was, oh my goodness, they probably saw the ad, right? I got an MS70 in a slab by a grading service. And then, that's what it is. I'm not saying it isn't what it is, but when it goes to the sell side, as you point out, you better be able to put the guy on hold that you're buying from, call another dealer and say, I've got this many, 1.25 slab, and what are they worth? Well, they're worth melt. Well, what's melt? Well, it's $29. Well, this guy only wants $69 a coin.
Right.
Do it. But there's so little.
Maybe as a gift, to your grandson and something like that. It makes a nice presentation.
Right.
But the fundamental thing, as you just said, what is the melt? What is the resale value? And it's probably right around melt. So people have to understand what is the melt value of what I'm buying. Yeah. And as long as they're focused on that, they'll probably do okay.
And I want to cover myself in the 10 rules. I talk about that. I mean, if you're an expert and you love collecting coins and, it's a one-off or a birthday gift, that's fine. But your primary investment should be bullion as close to spot as you can buy it. And that's the deal, because you don't have to have an expert or whatever. So we're on the same page there.
Yep.
What do you think it's going to take to get the investment community from the financial planner aspect to understand that these wealth managers that are managing, I don't even know what the minimum is anymore, $1 million, $2 million and up. And all of a sudden the stock market crashes and they find someone like yourself or myself, and they find out that Ibbotson and Associates, CPM Group, Harvard University and these other studies that guarantee that you need to have at least a 15% exposure to money, to precious metals, in order to balance your portfolio. And that's a fact, Jack. And all of a sudden, their brother-in-law tells them that, and they just lost, $6 million, and they had no hedge in the metals. I mean, someone sometime is probably going to get angry enough that you're paid by me to manage my wealth, and you don't know the facts that I'm supposed to be hedged in the precious metals, and you didn't do it. I'm taking you to court.
Yeah.
I mean, I know it sounds extreme, but it's also the truth, and it irks me because of the amount of effort I put forth. It hasn't been gargantuan. I'm not running, the league that you are. And I, again, compliment you publicly for that. But I've certainly butted my heads against the wall a few times, trying to get this through their heads, that they're looking at a situation that may backfire on. What do you think about that?
Well, I think people are starting to become more skeptical of the experts around them. I think COVID created a little doubt about the medical community. I think, as things have unfolded, the financial experts are losing a little bit of credibility with their people. I think you are already seeing a move away from sort of the commission-driven stockbroker model, and it seems to be moving more towards the wealth management percentage. I mean, at least I think the incentives have to be more aligned with the investor. And so in the case of a stockbroker, they make money on transaction volume and churning, whereas a wealth management is more of a percentage or a small percentage, and it doesn't really matter, whether there's trading or not. So I think, I don't know. I mean, honestly, maybe lawsuits about how it was violating the prudent man rule to not recommend an allocation to gold. I think there could be something to that, but I really just think that people need to take matters into their own hands. They need to educate themselves. They need to not inherently reflexively always follow the advice of the supposed experts. They need to consider, do they have a vested interest in this advice? Do they have other conflicts? Or are they not putting something in front of me because they're not allowed to sell it under the regulations, which is another thing. I mean, there's even FINRA. Like, I don't think it's easy for a stockbroker to say, go buy physical gold from such and such, because it's not part of the FINRA. It's not a security, and they have complications in recommending things that are not securities because of their regulatory licensing rules and so forth.
So that's how the whole
I don't know what the
ETF
answer is.
That's how the whole ETF thing started.
Right.
Because there was enough of a groundswell for whatever reason that I want to sell gold to my community, to my book, as it's called in the industry, and I can't sell commodities. And then they came up with ETFs, so they were selling security, but it was gold, and it was silver. Now I remember when it started. I mean, when the gold ETF came out, and it was a kind of a big hoopla around it, and I was getting all these calls and emails. Well, will they do a silver ETF? I could guarantee they will. And I talked to the Silver Institute, and they said, "Well, I can't say anything, but of course, yes, it will happen." Yeah. And that just gets around. I would say gets around the law. It just makes it a security, so it can be sold by a stockbroker. But coming full circle, as much as you've done, as I've tried to do to educate people, again, I go back to that adage: well, once a ship is sunk, it's like after the fact, people are going to wish they owned gold. They're going to wish they had a silver exposure. What else can we do? Or, is there something, it's the forest for the trees. I mean, I'm so deep in the forest, I can't see the trees. That's why, and, you may give me an idea or two, but, I've done all these videos. I've done the Matrix takeoff. I've done books. I'm doing a documentary, and yet it seems as if it falls on deaf ears. I'm not getting new people to wake up other than the extreme. When we had the banking crisis, I had 3 calls, and they all were like this: David, I trust you. I've listened to you for 10 years. I've listened to you for 4 years. I've listened to you for 3 years. I've got $1 million, 2 million, 5 million. I mean, there's some pretty big numbers in the bank, and I've never bought gold. Yeah. I want to do it, but I want to do it right. I don't want to make a mistake. They don't want that, infomercial at 2 a.m. on a cable channel. They called me and paid me a rather modest fee to make sure they didn't go awry. And that was because they were scared in the moment that their banks weren't safe. And so they took action. But that's a one-off. 3 months later, like your business, people kind of went back into the normalcy bias.
Right, right. Yeah, I honestly, David, I don't feel that I have the answer to your question other than, for our part, I think getting public policy better aligned to the extent we can, particularly at the state level where we can actually get these bills passed, that will help raise awareness, that will help remove impediments. And then beyond that, and of course, people can engage in that process. If they go get on our list at moneymetals.com and get on the email list, we will let them know if there's a bill in their state and they can engage and help by contacting their representative or so forth. And then other than that, honestly, I think you have to take care of your own house. You have to get your own house in order. You can't control other people. You can only do things to really control what you're doing. And so I think it starts with that, build a strong financial foundation. Gold and silver is a part of that. It's not all of it, of course, but it's part of it. And my opinion is gold and silver is really cash. It's your savings. You have other investments. You can own stocks. You can own private, real estate. You can own companies privately. But gold and silver is a better form of cash, and it's just about as liquid as cash in your bank. And so I think, or paper notes. So I think people have to take care of their own business first. Hopefully, they can engage with their community and in their states. But I think that unfortunately, these things tend to the crises is what gets people's attention, and I think it's going to take more bad things to happen for more people to wake up. I'm pretty confident we're going to see some bad things happen. We certainly have been the last few years. It seems like every time something happens, it's another reason, another reminder of being more self-reliant, possibly hedging yourself with things like gold, being more liquid. Unfortunately, I think it probably gets worse before it gets better, but I don't have the answers.
Yep. Understand. Well, again, I want to thank you publicly for all you're doing, both on the Money Metal side and with your sound money situation and getting the word out to people that can make a difference, and they have made a difference. So congratulations on that. I want to close out. I'll turn it back over to you. We can just give out, again, maybe the website so that people that are interested can contact you and maybe get on your mailing list.
Yeah. People should go to soundmoneydefense.org, just one word, soundmoneydefense.org, or moneymetals.com, or both, and get on the email list so we can communicate with you about these public policy battles. And David, I mean, one of the great things about being in this industry is being able to get to know people like you and work with people like you. You've been at this way longer than me. There's some really high quality people that are working hard to not just do a good job for their customers, but really to help change for the better society. And I'm very, very, very gratified and grateful to be able to work with you over the years. Thank
you for that. All right. Well, I feel the same way, and glad we finally got this accomplished.